Welcome back to the Airbnb Superhost Secrets podcast, where we help you kind of unlock the secrets to becoming a top-rated host.
hmm
Today, we're diving into a topic that can be a bit of a headache for new hosts.
Yeah.
Taxes in Australia.
Yes.
Don't worry, we're here to break it all down in a way that even if you're just starting out,
Right.
you'll feel confident navigating the tax side of your Airbnb journey.
Absolutely.
A lot of people are
Yeah.
they kind of want to dip their toes into Airbnb, but the taxes are what's holding them back.
That's right. It can be a little daunting at first,
Yeah.
but it really doesn't have to be.
Okay, so let's just start with the most important one.
Correct.
Income tax.
Right.
How does Australia treat income from Airbnb
Yeah.
compared to traditional long-term rentals?
Well, one thing that might surprise you is that Australia actually treats both short-term and long-term rentals the same way for income tax purposes.
Interesting.
So whether you're renting out a room for a few nights or a whole house for months, same rules apply.
So it doesn't matter if I'm doing like a one-night stay or a 3-month stay, it's all the same.
Exactly.
Okay, well, that's good to know.
Yep.
So walk us through how income tax actually works for Airbnb hosts.
Sure. So the first thing to consider is your tax residency.
Okay.
Australia has different tax rates for residents and non-residents.
Oh, right. Okay, so let's focus on resident hosts for now.
Okay, sounds good.
What are the key things they need to know about income tax?
Well, for residents, the tax rates are progressive.
Okay.
This means the more you earn, the higher the percentage of tax you'll pay on that income.
Uh-huh.
And here's a little quirk. The Australian tax year runs from July 1st to June 30th, not the calendar year.
Oh, that's important.
Yeah, it's a little different.
Yeah, that's good to remember.
Mm-hmm.
Can you give us an idea of what those tax brackets look like for the current financial year?
Of course. So let's say you're an Australian resident for tax purposes. For the 2023-2024 tax year, you won't pay any tax on the first $18,200 of your taxable income.
$18,200.
Yep. And then for income between $18,201 and $45,000, the tax rate is 19%.
19%.
That's right.
And it just keeps going up from there.
It does, and it keeps climbing from there,
Okay.
reaching 45% for income above $180,000.
So the more you make, the more they take.
Essentially, yes. But it's important to remember that those are just the income tax brackets.
Right.
There are other things to factor in as well.
Like what?
Well, on top of that, there's the Medicare levy.
Oh, right, the Medicare levy.
Yes, don't forget about that 2% Medicare levy,
Okay.
which helps fund Australia's public health care system.
Right.
And if you don't have private health insurance, you might have to pay an extra surcharge depending on your income.
That makes sense. So that's something to consider as well.
Definitely.
Now, what if you co-own the property with someone else?
Ah, good question.
How do you declare the income in that situation?
So if you co-own a property and you're not running it as a formal rental business,
Okay.
you simply split the income and expenses based on your ownership share.
Okay.
So if you and a friend each own 50% of a property, you each declare 50% of the rental income and can deduct 50% of the eligible expenses.
That seems pretty straightforward.
It is for the most part.
Okay.
But you did mention running an Airbnb as a business versus just an investment.
Yeah, is there a significant difference from a tax perspective?
That's where it can get a little more nuanced.
Yeah.
Running your Airbnb as a business opens up more opportunities for deductions,
Okay.
like claiming for marketing costs, professional cleaning services, or even the software you use to manage bookings.
Okay, so you can write off more stuff.
Exactly. But it also comes with more stringent record-keeping requirements.
Oh, so it's like a trade-off there.
It is. There's definitely a trade-off.
More potential deductions, but also more paperwork.
That's the gist of it. It really comes down to your hosting style and scale.
That makes sense.
Now, moving on to the actual rental income itself.
Okay.
It's not just about the nightly rate you charge, is it?
I have a feeling there might be some hidden surprises lurking here for new hosts.
Oh, you bet.
Okay.
It's crucial to understand that you need to declare all income related to your Airbnb, even those seemingly small things.
Okay.
This includes any bond money you retain if there's damage to the property.
Okay.
Insurance payouts related to your rental.
Right.
Reimbursements from guests for things like extra cleaning.
Oh, so even if they pay me back for something, I have to declare that.
Yes, you have to declare all income related to your Airbnb.
Okay.
Letting fees if you use an agent, and even those one-off lump sum payments.
Wow, so really is more than just the nightly rate.
It is. It's all-encompassing.
Okay.
Accurately reporting all of this is essential to staying on good terms with the ATO.
Yeah, absolutely. Transparency is key to avoiding any issues down the line. Couldn't agree more. Okay, so now let's move on to the part that everyone loves.
Oh, yes.
Deductions.
My favorite part.
What can Airbnb hosts actually claim back on their taxes?
All right, let's dive into those deductions.
I'm sure many new hosts are eager to learn how they can minimize their tax bill.
Oh, absolutely.
So give us the rundown.
Okay, so there are a few categories of expenses you can deduct.
Okay.
The first category is those you can deduct immediately in the same tax year you incurred them.
Okay.
This includes things like advertising costs for your listing, council rates, land tax, basic maintenance like cleaning and gardening,
Okay.
mortgage, interest fees you pay to a rental agent if you use one,
Okay.
and essential utilities like water and electricity.
So those are all pretty standard expenses that most hosts would incur.
They are pretty common.
You mentioned mortgage interest specifically. Are there any catches there?
There can be, while you can generally deduct mortgage interest, there are some important exceptions. For instance, you can't claim the interest for any periods when you use the property for personal use, or if a portion of the loan was for personal reasons.
So it's not a blanket deduction.
It's not.
Right.
You need to be mindful of how you're using the loan and the property.
Right.
And speaking of things you can't deduct, you can't claim the loan amount itself,
Okay.
loan balances, or repayments of the principal.
All right. So those are off the table.
They are.
What about costs that you spread out over several years?
Good question. That brings us to the category of expenses that you deduct gradually.
Okay.
This includes things like borrowing expenses,
Borrowing expenses.
which cover costs like establishment fees for your loan lender's mortgage insurance
Okay.
and those pesky legal fees associated with setting up the mortgage.
So those are costs associated with getting the loan, not the ongoing interest payment.
Exactly. And then there's depreciation, which is especially important for furnished properties.
All right. Depreciation.
Depreciation allows you to claim the decline in value of your assets over time. Okay. The ATO has guidelines on those effective lifespans to make it easier.
That is helpful?
Yeah, it can be a bit complex.
So, for example, if I buy a new fridge for my Airbnb, I can depreciate its value over a certain number of years.
Absolutely. And it applies to furniture appliances
Okay.
and even things like carpets and curtains.
Wow. So anything that's in the house that I'm using for the Airbnb, I can depreciate?
Pretty much. Yes, as long as it's being used for the Airbnb purposes.
Got it.
Now, I know this might seem a bit overwhelming,
Yeah, it's starting to feel a bit complex.
but do you have any examples to help illustrate how these deductions actually work in a real-life scenario?
I think that would be helpful.
Okay, let's consider the case of Laura, who rents out a spare room in her two-bedroom house on weekends.
Okay, a classic Airbnb situation.
Right, so imagine she earned $10,000 in rental income for the year.
$10,000, okay.
Throughout the year, she incurred expenses like council rates, mortgage interest, water bills,
Okay.
gardening costs, and land tax.
So how would she go about calculating her deductible expenses in this situation?
Since Laura is only renting out a portion of her home for part of the year, she needs to apportion her expenses to reflect that.
Right.
To simplify, let's assume the floor area of her house is used 30% for personal use, 30% by the tenant, and 40% are common areas.
Right.
Plus, the room was only rented out for 50 days of the year.
So we need to consider both the space used and the time it was rented.
You got it.
Okay.
So in Laura's case, her allowable expenses end up being 6.85% of her total expenses.
6.85%.
Yes. This is calculated by considering the tenant's room occupancy and their share of the common areas.
Okay.
Factoring in the 50 days of rental.
So even though her total expenses might be higher, she can only deduct the portion that directly relates to the rented room and the period it was rented.
That's right. It's interesting.
Her taxable net rental income would then be calculated by deducting those allowable expenses from her gross rental income.
This example really highlights how crucial it is to keep detailed records,
Yes.
especially when dealing with partial rentals and shared spaces.
Absolutely. Meticulous record keeping is key to ensuring you claim the right deductions.
Yes.
And stay on the right side of the tax man.
Exactly. Nobody wants trouble with the ATO.
Okay, so we've covered income tax and all the nuances there. But let's shift gears and talk about another important tax.
Honorable gains tax.
Or CGT.
CGT.
Yeah.
Yes. This one comes into play when you sell your property.
I think CGT can be a bit daunting for new hosts.
It can be, but let's break it down.
Can you give us a quick overview of how it works?
Sure, in a nutshell, CGT is calculated based on the difference between what you sell the property for,
Okay.
known as capital proceeds,
Capital proceeds.
minus your cost base.
Cost base, okay.
Your cost base includes the original purchase price plus certain costs related to owning and selling the property,
Okay.
like stamp duty, legal fees, and renovations.
So it's basically the profit you make on the sale.
Essentially, yes, but it's not taxed separately. Instead, it's added to your assessable income and taxed at your individual income tax rate.
So no special CGT rate.
Nope, it's all part of your income tax.
But are there any benefits for resident taxpayers when it comes to CGT?
Absolutely.
Okay.
If you've owned the property for more than 12 months, you're eligible for a 50% discount on the capital gain.
50%.
Yes, this can make a big difference to your tax bill when you sell.
That's significant.
It is. It's a nice little perk for long-term ownership.
Now, I know a lot of hosts might be wondering about the main residence exemption.
Yes, the main residence exemption.
How does using your home for Airbnb impact that exemption?
That's where things can get a little more complex.
Okay.
The main residence exemption can be tricky, and using your home for Airbnb can affect your eligibility.
Okay.
If you've rented out even a part of your home, you might only qualify for a partial exemption.
So if you're in this situation, it's definitely best to get professional advice to understand how the exemption applies in your specific case.
Absolutely. Getting expert advice is crucial in these situations.
All right, now let's move on to another tax that often causes confusion.
Okay. Which one is that?
Goods and services tax, or GST.
GST.
Okay. Do most Airbnb hosts in Australia need to worry about GST?
The good news is that most short-term residential rentals in Australia are exempt from GST.
Okay.
So you generally don't need to collect GST from your guests.
So that's a relief.
It is one less thing to worry about.
But I'm guessing there are some exceptions to this rule.
Of course, there are always exceptions.
Okay.
There are a few situations where GST might apply.
Okay.
This includes commercial properties and those operating more like a hotel.
Okay.
For instance, properties with multiple occupancy, central management, and services that go beyond typical residential rentals.
So if you're essentially running a boutique hotel through Airbnb, GST might come into play.
Exactly. It's about the nature of the service you're providing.
Right.
And it's important to remember the registration threshold.
Oh, right. The threshold.
If your annual turnover from your Airbnb activities exceeds $75,000, you'll need to register for GST and start charging it to your guests.
$75,000.
That's the magic number.
Okay.
The GST rate is 1/11th of the price.
1/11th.
So essentially 10%.
Got it. So most short-term rentals are exempt, but there are those exceptions for commercial or hotel-like setups, and the $75,000 turnover threshold is key.
You got it.
Now let's wrap things up with a quick overview of those often overlooked land and property taxes.
Oh, yes, those additional costs that every property owner needs to be aware of.
Right.
First, we have land tax,
Land tax.
which is an annual tax levied by the state or territory based on the value of the land you own.
Yeah.
The threshold and rates vary depending on where your property is located.
And I believe foreign owners might face an extra surcharge on top of the standard land tax rates.
That's correct. Foreign ownership can trigger a land tax surcharge in some states and territories.
Okay, so another thing to keep in mind.
Yes. And then there are council rates,
Council rates.
which also vary between different municipalities.
Right.
So it's essential for hosts to check the specific rates and rules for their area.
Absolutely. Understanding those local variations is crucial.
It can make a big difference to your overall costs.
This has been a really helpful overview of the Australian tax landscape for Airbnb hosts.
I'm glad you found it helpful.
What are the key takeaways you want our listeners, especially those new to hosting, to remember?
I think the most important takeaway is that tax compliance is crucial for Airbnb hosts in Australia.
Absolutely.
Understanding the different taxes, deductions, and exemptions can save you money and headaches in the long run.
And as we've seen throughout this discussion, keeping meticulous records is your best friend when it comes to tax time.
Couldn't agree more. Thorough documentation is essential to support your claims and demonstrate that you're fulfilling your tax obligations.
So organization is key.
Organization is king when it comes to taxes.
Great advice. Thanks for walking us through all of that.
You're welcome. Happy to help.
Now let's take a quick break, and when we come back, we'll dive into some of the common misconceptions about Airbnb taxes and share some tips on how to stay organized and make tax time less stressful.
Sounds good. I'm looking forward to it. Yeah, it does seem like a lot, but it's definitely manageable if you're organized
Right.
and you're proactive about it.
So for those new hosts who might be feeling a little overwhelmed,
Yeah.
what's the best piece of advice you can offer?
I'd say The most important thing is to treat your Airbnb hosting like a business.
Okay.
Even if it's just a side hustle or,
Right.
something you're doing just to earn a bit of extra income,
Yeah.
having that mindset will help you stay on top of your record keeping,
Hmm.
understand your expenses, and ultimately make the tax process much smoother.
Yeah, it's easy to think of Airbnb as just kind of like a casual way to make some extra cash,
Hmm.
but approaching it with that business mindset can really make a difference.
Absolutely. And remember, the ATO has access to a lot of data these days, especially with platforms like Airbnb reporting income directly.
Yeah, they know what's up.
They do. So trying to cut corners or hide income is not a good strategy
Right.
and could land you in hot water.
So transparency is key.
Always.
I'm curious, what are some of the biggest misconceptions you encounter when working with new Airbnb hosts regarding taxes?
One common misconception is that you can only claim deductions for expenses that are directly related to your Airbnb listing,
Okay.
like cleaning supplies or linen.
Yeah, just the stuff that's specifically for the guests.
Yeah, but in reality, you can also claim a portion of your household expenses,
Okay.
like utilities, internet, and even council rates,
Okay.
as long as you're using a portion of your home for Airbnb.
So I can actually write off like a portion of my internet bill.
That's right, as long as you're using the internet for Airbnb purposes.
Interesting. Okay, so that's a good one to remember. A lot of hosts might miss out on those deductions.
They do. It's important to understand how apportioning expenses works.
And are there any other kind of like common misconceptions?
Yeah. Another misconception is that you can only claim depreciation on brand new assets,
Okay.
but you can actually claim depreciation on secondhand assets as well,
Oh, okay.
as long as you have a reasonable estimate of their remaining useful life.
So even if I'm furnishing my Airbnb with things I already own,
Mm-hmm.
I might still be able to claim depreciation.
Exactly. It's all about understanding the rules and keeping good records.
Yeah, records, records, records. We keep saying that, but it's really important.
It's the foundation of good tax management.
Do you have any tips for new hosts on how to stay organized and make tax time less stressful?
The key is to establish a system that works for you and stick to it.
Okay.
This could involve using a spreadsheet accounting software or even just a dedicated folder for all your Airbnb-related receipts and invoices.
So just any way to keep it all together.
Exactly. You need a system.
I find that having a separate bank account
Oh, yeah?
for my Airbnb income and expenses can really simplify things.
That's a great tip. It makes it much easier to track your income and expenses. Yeah?
And it provides a clear separation between your personal and Airbnb finances.
So you're not mixing everything up.
Exactly. Keeps things clean and organized.
Now, when it comes to those tricky situations, like figuring out the main residence exemption or understanding whether you need to register for GST, is it always best to just seek professional advice?
I would highly recommend it.
Okay.
While there's a lot of information available online, every situation is unique.
Right.
So consulting with a qualified tax professional who specializes in property and Airbnb
Okay.
can give you peace of mind and ensure you're making the most of available deductions while staying compliant.
Yeah, it's an investment that can save you a lot of money and stress in the long run.
Absolutely worth it.
Speaking of investments, let's touch on that 50% capital gains discount we mentioned earlier.
Oh, yes, the CGT discount.
I know it's a bit further down the line for new hosts,
Mm-hmm.
but understanding how to leverage this discount can make a big difference when they eventually sell their property.
Can you elaborate on that? What are some strategies hosts can consider?
Sure, one key strategy is timing.
Okay.
Remember, you need to hold on to the property for at least 12 months to qualify for that 50% discount.
Right. Got to wait it out.
Exactly. So if you're thinking about selling, it might be beneficial to wait until you've held the property for over a year
Okay.
to minimize your capital gains tax liability.
So plan ahead.
Always a good idea.
Are there any other considerations related to capital gains that hosts should keep in mind?
One thing to remember is that the cost base of your property is not just the initial purchase price.
Okay.
It also includes any capital improvements you make,
Right.
such as renovations or extensions.
So like upgrade the kitchen or something.
Exactly. Keep detailed records of those expenses because they can significantly reduce your capital gains tax when you sell.
Oh, so even if you're spending money to kind of like upgrade your Airbnb,
Mm-hmm.
you might be reaping the benefits later on when it comes time to sell.
That's right. It's all about taking a long-term view and considering the tax implications of your decisions.
So we've covered a lot of ground today,
We have.
from basic income tax to capital gains, and everything in between.
It's been a comprehensive deep dive.
As we wrap up this deep dive, is there a final thought you'd like to leave our listeners with?
Well, I think, the main thing is don't let the taxes scare you off.
Right.
It seems like a lot, but if you stay on top of it
Yeah.
and you're organized, it's really not that bad.
So don't be intimidated.
Exactly.
Be empowered.
Be proactive.
That's a great takeaway.
We've talked about record keeping and, understanding the deductions and seeking professional advice when needed.
Are there any other resources or tools that new hosts can use
Oh, for sure.
to make their tax journey a little smoother?
The ATO website is a fantastic resource.
Okay, the ATO.
They have tons of information just for Airbnb hosts, including fact sheets guides.
Yeah.
And they even have these online calculators, which can be really handy.
Oh, cool.
And if you need personalized help, they also have a dedicated helpline.
Oh, that's great.
So you can actually talk to someone.
So that's a good starting point.
Yeah, definitely.
Are there any specific tools or software that you recommend?
Yeah, there's a bunch of accounting software options out there
Okay.
that are designed specifically for small businesses and sole traders, which can be super helpful for tracking income and expenses and generating those reports for tax purposes.
It's like automating a lot of that record keeping.
Exactly. Makes things a lot easier.
Are there any that are free or are they all paid?
There are some free options out there,
Okay.
like budgeting apps and spreadsheets you can find online.
Okay, great. So even if you don't want to pay for software, there are still ways to manage it.
Absolutely.
Excellent point. So while professional help is an option, there are definitely resources out there for hosts who want to be more hands-on.
Yeah, if you're comfortable doing it yourself, there are tools available.
Now, what about the Airbnb community itself?
Oh, the community is a goldmine.
Is there any value in tapping into that for tax advice?
So much value.
Okay.
You can connect with other hosts online or in person, and they can provide amazing insights, tips, and support.
Yeah, because they've been there, done that.
Right, they've been through it.
And they've probably made the mistakes so you don't have to.
Exactly. And it's not just about tax advice either.
Okay.
Networking with other hosts can help you stay up to date with any changes in regulations.
Right.
Or tax laws. You can discover new strategies for managing your finances.
Yeah.
And even find recommendations for trusted tax professionals if you do need that specialized advice.
So it's a good way to stay in the loop.
Definitely keeps you informed and connected.
So to wrap it all up,
Yeah.
success as an Airbnb host isn't just about creating that fantastic guest experience.
It's more than that.
It's also about being financially savvy and understanding those tax implications.
You got it.
So don't just focus on the 5-star reviews. Make
Right.
sure your finances are in order too.
It's all part of the bigger picture.
All right, well, this has been such a helpful discussion. Thank you so much for sharing your expertise with us.
It's been my pleasure.
And to all our listeners out there, we hope this deep dive has given you the knowledge and confidence to tackle the financial side of Airbnb hosting with ease. Remember, with the right approach, tax time doesn't have to be a dreaded event. It can actually be an opportunity to reflect on your successes and plan for an even more profitable future as an Airbnb superhost. Thanks for tuning in. Until next time, happy hosting.